Greetings. This is the international arbitrage on the 1st of November 2023, and today we're going to continue talking about the new private fund advisor rules in the U.S. Now, as always, we are talking here to non-U.S. persons with non-U.S. businesses who are raising less than $100 million, and they're trying to do this in the U.S. They're raising from U.S. accredited investors. They're raising less than $100 million, and they are non-U.S. businesses. And as we've explained in all our videos on the international arbitrage, is that when you have a non-U.S. business and you're raising money in the United States of America, U.S. investors will perceive your business as high risk. They will perceive it as high risk because your business is not based in the U.S. Legal jurisdiction. The private banks of these accredited investors and their trustees, their compliance departments are all based in the U.S. They probably don't have non-U.S. offices or much international experience. And so many companies, firms, and people in the U.S. who don't have a lot of international experience or exposure view anything international as high risk. And so remember, the world that the multinationals and the billion-dollar companies and multinational corporations who do international business easily, that does not apply to us who are dealing in amounts less than $100 million, family-owned businesses, businesses that are owned and operated by owner-managers. It's very different for us. We don't move. We have a completely different set of problems, okay? So owner-managers who are non-U.S. owner-managers and trying to raise less than, 20, 30, 40, $50 million in the U.S., and you have a family-owned businesses, owner-managed business, then you have a different set of problems and challenges. Now, the U.S. Some 6 weeks ago now probably has introduced the new private fund advisor rules. We have made videos on here about the new private fund advisor rules, and essentially the cost of raising money in the U.S. has increased because these new private fund advisor rules have done a number of things which grant U.S. investors a lot more investor protection. Things like there's quarterly statements of reporting, there is more valuation reporting, more valuation required, more regular valuation is required. Fiduciary obligations now cannot be removed from agreements. There's all these different things that have been implemented by these new private fund advisor rules. And so in general, U.S. investors naturally expect and will become accustomed to a lot higher investor protection because many U.S. persons, especially at these lower levels, invest largely a lot in domestic U.S. projects. They don't have a shortage of projects in the U.S. because the U.S. is one of the most dynamic markets for investment, as we all know, and business in the world, which is why a lot of people continue to flock there. And the new private fund advisor rules are going to have increased investor protection. The U.S. investors, of course, and their advisors are going to get used to this level of protection. And so those of you who are non-U.S. persons with non-U.S. businesses and want to raise money in the U.S., you're going to have to close the gap. How are you going to close the gap? Well, in other videos, we've talked about how to close the gap on compliance, on investor protection and different things like that by talking about strategies and structures like captive insurance, like using U.S. Service providers and using U.S. regulated financial institutions and other things of that nature. But the simple fact of the matter is that if you're using international private investment fund and you may say, for instance, have a presence, a regulated and registered presence of your fund manager in the US. The question is, how are you going to meet the investor protection? So let's say you've done that, and now, of course, you're going to have to basically provide the same level of reporting and information that US investors will want to see. They're going to want the same fiduciary obligations. But this increased reporting, this increased regularity of valuation, and the increased transparency is going to, at the bottom line of all this, is that it requires more communication. So you now have to, when you have an international private investment fund that owns a local operating company in another jurisdiction, so that means now that you have to be a lot more transparent and a lot more, but then do a lot more communication work in explaining the financials of the international business to your US investors. And you can't just leave it to once a year. You can't just fly in once a year and do it. You're going to have to do it on a quarterly basis, on an ongoing basis, because of the implications of these rules. And so, bottom line is, a lot more communication is going to be required. And the type of communication that enables someone who basically has a leg in both camps, in the frontline jurisdiction and in the US jurisdiction. Because without communication, what do you get? Conflict. And the last thing any owner manager wants to do is end up in court with US accredited investors who have deep pockets and can hire a plethora of lawyers. That's not what anybody is setting out to do. And so doing this communication, the first thing that comes to mind is investor relations. You all know in large public listed companies, investor relations is a dedicated job, department, function, and essentially for private companies that raise using international private investment funds, you can think of it in terms of you're going to need some form of investor relations. You're not going to be able to do it yourself because you're too busy on the front lines managing. You're too busy on the front lines managing the day-to-day, or you should be, because that's where you're needed. So you're going to have to have communication. You're going to have to get someone in your organization to do the communicating. But you have to be aware. It needs to be the right person who can explain on an ongoing basis and navigate commercial issues overseas and explain them to people who have a completely different perspective and concept and expectations in the US. And so taking on US investors in the future is going to be very different to how it was because of these new private fund advisor rules and the extent. And I know there's some people say, oh, no, we'll just get exemptions. Well, yes, you can talk to US securities lawyers and probably get some exemptions for the foreign private fund advisors. I'm not advising on these things, but I say to people, well, does that make sense? Because at the end of the day, investors are people, and they're going to become accustomed to a higher level of investor protection. So will their advisors, and at the end of the day, it's not going to help you to get exemption. So even in the first instance, if you're exempt, and so you won't be providing all of this transparency, then investors probably will view your project as too high risk and they won't invest anyway. And then let's say you get past the first hurdle and you do get US investors, then eventually over time, as their expectations change and they want more and more transparency and they're pushing for it and you're pushing against it, that is a path to conflict. So there's going to be a cost to explaining what's going on in the front line in terms of the reporting that has to go to US investors. And just remember, for all of the owner managers that have funds and family wealth and family structures in the US, if you now take on US investors, just remember that you need basically some asset protection, because sometimes communications, misunderstandings happen, things happen. You can't say you're not going to get into litigation, because misunderstandings and communication is a human dynamic. Anything is possible. So therefore, what you have to do is basically think, okay, now that I'm raising money in the US, I need to get myself and my family some asset protection, so that basically if there's a misunderstanding and I end up in the US courts, which can easily happen, it doesn't, it's not going to impact my long-term family situation. The only thing, of course, that is at risk is the commercial arrangements pertaining to the business, the international business, which is raise funds in the US. So communication, investor relations, small scale investor relations. Now, I'm not saying that every small business is going to need an investor relations department, but somebody in the team is going to have to step up, become good at explaining operational issues continuously to investors and potential investors, because just throwing the reporting at them remotely is not going to work either, because then people are left to come to their own conclusions. So you're going to want to be front and center with these people regularly, more than once a month, talking things through, or being available and making it known that you're available to talk things through, to avoid the potential for misunderstanding and miscommunication, which can lead to obviously conflict. There are, the reason why I say that also a lot of owner managers that international private investment funds are better than public listing, especially when the business is small and it requires a key man, is because there are thousands of shell companies in the UK and Canada, where when you look into their stories, what you find is that they have basically become defunct or shut up shop and gone dormant, because the board of directors in Canada or in the UK simply got into arguments and couldn't understand what was happening on the front lines of the operation of the international company. So don't be a victim of these types of dynamics. I'm going to cut some more videos on this. And lastly, what I'll say, don't forget, when you are getting your US securities advisor, make sure it's someone that understands these issues. Make sure it's a US securities advisor who isn't just fantastic at doing a lot of US domestic work. They need to understand the international perspective and the asymmetrical problems that an international business owner is going to have when they're raising funds in the US. Okay? All right, guys, that's it for now. Cheers.